Since Q4 of 2020, the Bitcoin price began surging as investors shifted their attention from the losing stock market to cryptocurrencies. At only $10,000 in September, BTC quickly turned things around and rallied to $29,000 by the end of the year, spiking to as much as $64,000 in a mid-April 2021 all-time high. For the past few months, Bitcoin has been unstoppable. While the altcoin market saw significantly higher percentage gains, none could rival BTC's overall valuation. So why is the Bitcoin price falling? Two main factors contributed to Bitcoin's abrupt fall from the moon. First was Elon Musk's tweet, which outlined how Tesla would no longer accept BTC as payments moving forward, as the company doesn't support the coin's unsustainable fossil fuel consumption. The second cause for concern was the vital Bitcoin news from China, wherein the country announced a major cryptocurrency crackdown pioneered by Vice Premier Liu He, the most powerful figure in the country, to regulate the coin industry thus far. Mainland Chinese miners still hold massive power over the Bitcoin hash rate, accounting for 75% of the network. Beijing is putting more serious hats on this time around, forcing some of the biggest mining pools to fold. In particular, mining rig manufacturers are shifting their market strategy to attract North American and Central Asian customers, where mining remains largely unprohibited. Earlier this week, JP Morgan Chase and company strategists wrote that it's too premature to believe that it's the end of the recent Bitcoin downtrend. While the coin has rebounded from a $31,000 low on the 24th to a monumental welcome back to $40,000 just 2 days later, there's still a possibility for BTC to plummet to under $20,000, but the coin has been resilient against dipping below the $30,000 mark. Despite the Bitcoin sell-off, the coin is still one of the best investment assets when calculated against risk-adjusted returns. This term refers to an adjustment in an asset's performance by considering the risk factors involved in its growth. In particular, it's the newest and speculative nature of digital assets that's driving up the risk in Bitcoin investments. Early hodlers might have scored big in the latest bull run, but latecomers who entered the market when BTC was trading at $60,000 have it hard. Moreover, despite the intensity of the sell-off, BTC is still up by $9,000 since the start of the year and $30,000 since May 2020. Ultimately, roadblocks, particularly government regulations, are blurring the future of BTC, increasing the risk investors have to consider before taking advantage of the current low. While Wall Street scratches its head over the Bitcoin price dilemma, one thing's for certain: persistent investors have not yet given up, allowing the coin to stay above the $30,000 line.